Hello again, traders. Jason here with Forex Traders Live. Wanted to welcome you back to another free weekly market preview. Going to talk about a couple of different things here. And first things first, the euro, the one everybody's looking at. A lot of people are asking about. I was wrong on this one. I thought we had probably seen an interim bottom on a 3 drives to a bottom low, and the market continued to roll against us. We had a little bit of good Greek news. $1 trillion bailout package, and the market has ignored that, and we've closed the week. I've got the weekly chart up here, as you can see, closing almost right on the lows of the lows for the day. 23.58 for the week, low 23.54. So I mean, we're within 4 pips of the low for the week is where we closed. Looking left, right against that structure on the week, this was financial crisis lows that we're looking at here. This rollover that happened here, financial crisis, the rally, and then the takeoff here. So now we're back down against that, guys. And what I can tell you is this is critical here, critical mass right here at around 23.42s. All right, a break of that, and this is where we're going. Copy and paste. A break of structure down that takes us to 114s. Okay, so if we get under this, you can expect the market to go ahead and press down to those 114s area. That would be my anticipation. And given the rate at which we've rolled over here and the strength that we've rolled over on, pressing right up against those lows, we couldn't get through them for the end of the week, but we're definitely knocking on that door. Now you look at this RSI. This RSI is just buried at 7. On our 7-period RSI, but that we've seen them go much lower, and we've seen them continue to drift down on bullish divergence all the way down towards our target buy zone. So nothing saying right now I'm out of this market. I misjudged how severely the market would take the news, and then of course I exited the majority of my position on the Greek the $1 trillion bailout package. The remainder of my position taken out on trail stops. So it just goes to show you, sometimes you do all the analysis correct again, and it, the trade just doesn't work out. And what you can do is, like I tell my traders, you can handle it one of 2 ways. You can be upset and angry and frustrated, either at yourself or with the market, or you can chalk it up to, look, it was just a trade that didn't work out. We made my best estimate, made my best guess as to what I thought the market was going to do, and came up short. And that will happen. It'll happen a lot for you as a trader. The important thing is not. The more important thing is how you deal with the loss, rather than if you continue to trade your plan. Basically, is what I'm saying. If you've traded your plan, if you've made a good analysis, you've made a good trading decision, and the trade doesn't work out, well, that's just going to happen. So we chalk that one up. But right now, AB equals CD. If we draw on our Fibonacci retracement here, swing high to swing low, we'll see almost a 786 retracement here, so a rather deep retracement there. But we would expect to see, if we do press through here, a move back down into the 14s. So be on the lookout for that. If we get a rally out of this, where could we go from the rally? Just to give you guys an idea, Fibonacci swing high to swing low, back up into the 618. We could go to 140s. So again, we'll be looking for opportunities there if and when they occur. But right now, nothing but people wanting to get rid of euros, and nothing on the horizon, from what I can tell, that's going to shift market sentiment on that. We'll just have to wait and see. Switching now to New Zealand yen, we've got a AB equals CD completion at a 127 extension. Would anticipate a rally back up into close to 67s on this one. And anticipation of potential move lower. But for right now, that's what we would look at here. ABCD pattern completing at the 127 last week, and good chance that we would see a rally here. So 65.10's probably 65.10's a good area to look to get long, and again stops below 65.04 as a protection. Taking a look down at Aussie dollar, we've got just about a completion here of a Gartley pattern, a bullish Gartley pattern. Now this was a shallow retracement of the A to B leg. X to A to B. The A to B leg did not pull back into the 618 that I really like to see. I like to see that nice 618 retracement. We only got about to the 50% retracement line here on this A to B retrace. So not not a a perfect 222 as I like to see it, but the second retracement was a 618 and now rolling over down into a 127 extension. So 88.40s, look to buy those. Stops will have to go below the spike low here at around 87.42. So you do have a little bit of you've got a pretty wide stop on that. So go ahead and make your trade accordingly. Euro Aussie, I just wanted to show you this, guys, to show you how far a market can slide. We talked about how far a market can slide after it goes oversold. I want you to take a look at this. Market goes oversold initially here, back up at 155s. Market then rolls over. We go oversold again after breaking structure of the 55s. And then you see divergence. Market goes a little oversold again. And then from here, from about March 25th to today, you just see a slow slide on divergence as the market just continues to decline, And this is why I would love to look for a good buying opportunity here. I want a reason to be long Euro Aussie, because I think we've just come out of looking at this on a daily chart. If I scroll this back, you guys can see in here, these are the lows. These were the ultimate lows, these 155 area. And we've now breached that, and we've driven all the way down to 139. So once the market finds a bottom, once it finds an area where it's done and it wants to see a recovery, I think we could see a recovery back up into 55. There's a lot of counter trend opportunity here for someone who's trying to find a place to stop. But even if I go down to a 4-hour chart here, you can just see there's nothing here. There's no channeling. There's no base of support that's being built here. It's just continuing to slide. And until we find some reason or some validation for us to be able to get long on this, we've just got to continue to sit and watch it and wait for a valid trading opportunity. And there just isn't one right now. Last thing, let's have a look at pound yen. Pound yen could be a nice one. We'll have to wait and see. We have some opportunity here at a 127 extension around 143.50s to look to get short. You actually have a little Gartley pattern in here. This just completed the B to C leg. Now looking for a C to D up into a 127. There's no telling that this is going to happen right now. We would wait for a break of structure here of the highs of 140.56. And if we see that break of that high, then we would definitely want to be looking for those 127s to get short, because that will complete that Gartley. There's not a whole lot of structure there. I mean, there just really isn't any structure at that 127. And so except back here, if I go ahead and draw in my line here, you can see I've got a little bit of structure all the way back there, but all this channeling, this basically the consolidation that we had that had formed up in here, none of that is anywhere near the 127. So we'll have to wait and see, but that would present a valid trading opportunity to get short if we moved up into that zone. But for right now, it's just a hold. It's a hold and wait and watch. That's about all I got. I'm trying to keep these videos a little bit shorter, guys, just because I don't want I don't want people getting bored or frustrated with me when I'm putting the videos out. But we're running about 8-9 minutes now, so I ran through quite a bit to talk about today. And for those of you who follow the videos on a regular basis, you probably caught on pretty quick to what I was talking about, because you see it every week. For those of you who are joining me for the first time, thank you so very much. I really appreciate you taking the time to watch the video. I do this for free every week, and the feedback I get is just great. It really makes it worthwhile and kind of validates me for doing it. If you have questions or comments, please feel free to email me, trader@forextraderslive.com. Visit you're on the website right now if you're watching the video, but feel free to poke around, send me an email, ask me a question. And then, of course, if you want to have these, if you like what you saw here and you want to have these emailed to you every single week, all you got to do is just fill in right underneath this video. There's a little sign-up box. Just fill out your email address. I don't need your name or anything like that, and I'll just send it to you every week. And we got several thousand people that are on the sign-up list that get the video every week, and I'm excited to send it out to them, and I'd love to send it to you too. So until next time, traders, good luck and good trading. My name's Jason, Forex Traders Live.